In this video, we'll take a look at journal entries and how they can be used to cook the books. One of the greatest dangers in financial statements is that management of a company might do this. So we're going to look at how journal entries are posted and how they can be used in a devious way. Let's suppose a company gets toward the end of the year and it would like to have a certain amount of profit, but they're not there. They didn't achieve their goals. And because they didn't achieve their goals, maybe some of the top brass in the company are not going to get their bonuses. So how might a company play with the numbers and create revenues and assets that don't exist? Well, it's pretty easy. Somebody on the last 2 or 3 days of the year could go into the accounting system and debit receivables and credit revenues, let's say for $8 million. You could pick really any number. But let's suppose in this example, the company needed another $8 million in revenue and profit to meet their goals. Well, you make this journal entry. It's a fictitious journal entry. It's false. It's really lying. But any company can do this, and they can do so in less than a minute. To post this type of journal entry literally takes less than a minute. And so companies can alter their assets and revenues and net income with one journal entry. In this example, we debit receivables, credit revenues, and you're done. So if you're the auditor, you've got to make sure that this doesn't happen, because if it does, you have a material misstatement, and then you've got a problem. So let's look and see what auditors need to do to ensure that these false journal entries don't occur. AUC 240, consideration of fraud in financial statements. That audit standard says that you as the auditor must test journal entries. Now, it gives you some information about how to go about doing this, but it doesn't, for example, tell you how many journal entries to test. One of the things it does encourage you to do is test the journal entries toward the end of the year. And the reason being, as in the example I just gave you a moment ago, companies can manipulate their earnings toward the end of the year with journal entries. So if you're the auditor, you know that's a risk, and you want to audit at least some of the journal entries toward the end of the year, especially those that deal with receivables and revenues. Before you start testing the journal entries, you really want to do a walkthrough of the journal entry process. You want to know who has the ability to post journal entries. You want to know what types of journal entries are commonly made. You want to know, are there any journal entries being made to non-standard accounts? And so sit down with your client, especially the people that are making the journal entries, and get them to show you how they make the entries. Sometimes those entries are made directly in the general ledger. Sometimes there's separate journal entry software that interfaces with the general ledger. But find out how a journal entry can be made. And then just what I would do is I would take 1 month's journal entries, pick July, whatever month you want to pick, download all the journal entries for the month, and then just scan those to see if anything jumps out. Now, that's not a required procedure, but it'll give you some idea of what the common journal entries are. And if there's something really funny, say you see a $50 million entry, you probably want to dig into that and see what that's all about. But download the journal entries, say, for a month and scan those, and that'll give you an idea or a feel for the journal entries that are commonly made in the company. Now, I would do that as you're doing the walkthrough and you're making inquiries of the people making the journal entries. Go ahead and download, a month's journal entries and take a look. Also, you want to look at some journal entries, look at the documentation. So we call this inspecting documents, but inspect the journal entry. So you're asking a question, you inquire, you inspect a document such as a journal entry. Then you're also making observations. Who is doing what? And so if you ask questions, you inspect documents, you make observations in regard to who is doing what in the journal entry process, then you want to document those elements as a part of your walkthrough of the journal entries. After you've done your walkthrough, you'll have a feel for where you think things could go wrong. So in risk assessment, and a walkthrough is a risk assessment procedure. In risk assessment, you're trying to see where you as the auditor, where you think potential material misstatements might occur. And so as you're looking at the journal entries, you're thinking about, if somebody wanted to play with the numbers, what's the most likely place that would occur? And then you want to test the journal entries accordingly. If you feel like there's potential for misstatements or journal entries at the end of the year, then you're testing more heavily toward the end of the year. Maybe you see a situation where at the end of each quarter they need to meet certain metrics and somebody could play with the numbers at the end of each quarter. Then you might test the journal entries at the end of each quarter. So depending on your walkthrough, depending on the risk that you see, then you're going to plan your test of journal entries. So then you select the journal entries you're going to test. Most people will download these into an Excel spreadsheet. Let's say you pick 15, 20 journal entries to look at. Then you're asking for the support for each of those entries, and then you'll look at that to see whether or not it makes sense. So after you've done this, then you'll have a better feel for whether or not there are any journal entries that look funny. And if there are, then you'll want to pursue that some more. If not, then at that point you may feel like, okay, I'm good with the journal entry process. So why are we doing this, by the way? Why do the audit standards require that we test the journal entries? Well, we test journal entries because there's always a potential for management override. So even if a company has perfect internal controls, if the top brass want to override the internal controls, then they can require or make their bookkeeping staff post entries like this to get the results that they desire to have. That threat, management override, is always present. So that's why we test journal entries. So I hope this helps. Just keep in mind that journal entries can be a very dangerous part of a company's accounting records. You want to always test journal entries. You want to understand the journal entry process with a good walkthrough. You want to plan the test of those journal entries, then you want to document that test. And another part of this is by doing so, you'll do better in your peer review. So this is one of the things that a peer reviewer would look to see if your company, your audit firm, is following these requirements in AUC 240. So I hope you find this useful. Until I see you again, take care and bye now.